Welcome to the 2022-2023 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Thursday edition, January 19th, 2023. Please be sure to subscribe for the latest interpretation of financial news in the U.S. and abroad. Thank you for your support. This will be a brief update today. We're running against the debt ceiling, according to MarketWatch.com. So the Treasury, quote, using extraordinary measures. Listen, we've always been running against this debt ceiling years after year with the budget, in terms of the partisan budget that we have going on here. And what's going to happen is we're going to continue. Will there be a shutdown or another continuing resolution passed to get us through at least through June? So far, it looks like we have a continuing resolution to get us through June, but it's not so much the debt ceiling as much the reckless spending. When you're in a slowdown with a recession or a depression, government spending would, in fact, at least curtail or slow down. But what we've been experiencing is a acceleration of government spending and expenditures, and also private sector. While the private sector has been cutting back jobs, as you know, Amazon laid off 10,000, Microsoft laid off 10,000, and some other tech companies have been laying off. And now the music has set in for a lot of investors here on Wall Street. They're saying the Dow falls 260 points today. Stocks sell off intensifies as investors, quote, quit cheering on bad economic news. Now, remember last year in the fourth quarter, the more bad news we got, it seemed the stock market continued to go higher and higher. Investors could not get enough of the news, the bad news. We were experiencing continuing claims rising, and then we had initial jobless claims dipping, and we had more supply chain issues that everybody glossed over and said it was just because of the pandemic, that we're on the third year now of the pandemic. And so now investors are left with a gloomy week as the meeting in Davos, Switzerland, of all the world economic big boys and big fans and ladies and gentlemen are meeting there. The Dow is continuing to fall 1% respectively as each index looks to bounce back from the worst year since 2008. That's key, when we had the biggest recession in 2008, as the Federal Reserve hiked interest rates at the fastest pace in decades in an effort to tame inflation. Now, remember, their goals to get inflation down to 2%. We're still at 7.2% officially inflation. We know unofficially inflation is at 20%, guys and ladies and gentlemen. So what's going to happen is the investors are going to continue to not invest. They're going to continue to realize that this stock market is a Ponzi scheme, and that the weight is going to come to them. The bad news is actually real news, and that this bad news, that this debt is continuing to climb here. We're over $31 trillion of debt. That's $94,220 per American citizen right now, $246,000 per taxpayer. And, another thing we haven't heard a lot about more now is the student loan forgiveness. That's on hold, guys. So, they were always hoping for some relief, and that's on hold. The migrant situation at the border, the payments, New York declared a state of emergency. For all that's got to be paid for, the hotel, the lodging, the food, the resources on the border. So we have all these the infrastructure program is on hold now. As you know, the bridge ready, shovel ready projects, that's on hold because of this debt ceiling and because of the budget that we have here, that's on hold, that's suspended. And so these next 2 years, the administration is going to have a hard time getting things passed with all of these going on, not to mention the defense war budget that's been blowing up due to what we've given to Ukraine and all the billions of trillions of dollars that we've been giving to Ukraine and other parts of the world, maintaining the United States over 750, 800 bases around the world too. So let me know what you're going to think about that. What do you guys think about that? And how the debt to income ratio for the United States is going to play into this economy stalling out in either the later part of this year or next year, because we still haven't gone through the biggest three hits to this economy yet: the housing market crash, the credit market crash, and the infrastructure crash, meaning that the infrastructure is going to be crumbling in not just one area of the country, let's say like California, but it's going to be in every quadrant of this country: the Northeast, the Southeast, Midwest, West, all in between. So that's the big four pylons that hadn't crashed yet, along with the dollar collapsing. But the dollar collapsing, we can already loop that into as being, it's going to be later on, not this year, but later on, closer to 2025, once the printing and money printers have ceased to make any difference, and people realize that the value of the dollar, the purchasing power, has really gone down to nothing. And you've already seen that now with the grocery thing, because the groceries, guys, you've been to the grocery store. 2-3 bags, $100 is nothing now, so it's getting there, but not to the point where people realize that, man, we're really gonna have to start figuring out that we want to get eggs, bread, or milk, or tuna, crackers, or beans, pinto beans, whatever. So they're gonna make choices between that or gas on my car. So we'll have to see what happens, but I just want to give you a quick update here. Earnings comes out later on this week, and jobless numbers come out. Jobless claims come out tomorrow at 8:15, 8:30. We'll have an update with that coming up on Friday. Thank you very much for listening. Have a blessed day. Stay tuned.